Hi, I'm Ross from Smith 150 Group Property Accountants. I've just been going through a few different examples, and the other day I did some examples in Palmerston North, what rentals I could look at. Today I'm going to look at a Hamilton example. It's one that I used for a recent webinar that we did, and just an example of some different sort of properties out there and what sort of things I might look at. So I'm going to share my screen and we're going to look at, Hamilton property. So this is, a Hamilton property. It's in Hamilton East. It's actually sold. So it's at 22A Te Araha Street in Hamilton East. Its asking price is $999, let's say $1 million to make it easy. It's a block of 4 times 2 bedroom units. It's got off-street parking. Its gross rent, the real estate agent is saying, is $67,600 per annum. It's reasonable. It's just a reasonable property that looks okay, not looking amazing. I haven't actually been to the property, but yeah, the inside looked like it needed a little bit of work. And yeah, it's just a good solid property. The fence, when I show this, looks like a little bit of a lean. So there's going to be a few things you're going to need to do it. It is an older property. It is block. So yeah, it's going to be pretty sturdy, pretty low repairs. So the first thing that goes through my mind is it's 4 2-bedroom units. Can I subdivide it into 4 separate titles? So that would mean you're purchasing them for $250,000 each. In the Hamilton market, that would be extremely cheap. Even if you added on some costs to separate them and do fire rating the walls and things, it's still going to be very cheap, and they're going to be worth quite a lot more than that. So if you could separate them into 4, you're looking at a substantial increase in value. I haven't gone through this with a surveyor. I had a quick chat to Troy at Rad Surveying in Hamilton, and he said that with existing rights it might be possible, but I haven't actually got him to look at this property. The story with this property is I did it for a webinar a couple of weeks ago, and then I've been thinking about it, and I was like, actually, it's not too bad. Maybe it's worth actually getting the surveyor to have a look and seeing if it's available. Well, yeah, late last week, I talked to the real estate agent and it actually sold. So there was no point looking any further than that. But the basic idea would be looking, can you separate them into 4 titles? Even with small land, it might be possible under existing rights. So it would be worth getting something like this under contract and then, talking to a surveyor and see if it's possible. If you can't do 4, maybe you can do 2. I would definitely get an independent rental appraisal on it. $67,600 rent. The real estate agent would have worked on 52 weeks, so $1,300 per week. That's $325 per unit. Again, I think there's some room for some increase there. Maybe just a little bit do up, or even just getting a better market rental for them. You can normally get more than $325 a week for 2-bedroom in Hamilton. So maybe some opportunity to increase the rent as well. So what we're looking at overall is we're hoping we can increase value by subdividing them, separating the 4 2-bedroom units. We're looking at hopefully trying to increase the rent and improve the return. So yeah, this property is starting to look like it's got some potential. My blank screen means that I should be focusing on my spreadsheet. So I'm just going to drag my spreadsheet across and we'll share that and we'll start looking at some numbers for it. So hopefully you can all see my spreadsheet. So we're looking at a 4 2-bedrooms, in Hamilton East. Awesome spelling for me. We're looking at buying it for around about $1 million. And I'm just going to work on the rent, how it is at the moment. Your cost to buy, it depends on what you're looking at, but realistically for this, you're looking at probably spending a little bit more. You're going to spend a little bit on surveying and things like that. You're probably going to get a valuation or some sort of information and some sort of building inspection. So you're going to spend more than normal on this sort of property. You're going to get some sort of cash contribution. So overall, you're going to borrow about $1 million. For those of you who've watched me before, I always work on 100% debt. And the reason why is if you're putting in money, which is great if you've got it there, but you need a return on that money. So always work on 100% debt to truly, look at how a property works. This property, 4 two-bedroom units, not awesome condition, but not too bad. I'd work on maybe 50 weeks. And the real estate agents have told us 1,300 per week. But yeah, just make sure you get that checked, get an independent rental appraisal. So they had 67,600, I think. I've got 65,000 because I've based it on 50 weeks. So it's around about a 6.5% gross yield. Then we look at all the different expenses. So you've got more properties, so a little bit more accounting. Your insurance is a tricky one. Yeah, I'm guessing about $3,000 insuring the whole thing. Interest rates just keep going down and down. Now you're at 2.55%. Property management, I've got property management at 8%. And then also adding in that you're going to, yeah, there might be 4 properties, for example, that you have to find a tenant, maybe $300 a property, so $1,200 extra. Rates, we're looking at the rates being about $4,000 would be my guess. And repairs, it is block, but you still will have things to do long term, so maybe 6. We'll go a little bit higher. We'll go 2,000 each, $8,000. Allow something for seminars and education, allow something for Waikato Property Investors Association member or New Zealand Property Investor Association member, some travel for the property. You only travel there once. I've allowed 100 kilometres. So generally you're looking 65,000 in, 50,000 out. You're looking at making about 14,000 cash flow positive. You're then looking, yeah, over 10 years, I sort of predict out what will happen. I have property prices going up 6.3%, rent going up 3% a year. So yeah, I'm conservative with this. I've got interest rates going up to 5%. And yep, that's been really, really miserable and conservative, but I'm sort of trying to paint an average or bad picture here, not the rosiest best picture. So in 10 years time, we're still looking 3,000 positive. Chattels depreciation, the average condition, you're not going to have huge chattels, so I'd work on about 6,000 a year. It's going to reduce your profit down. If you can be clever and put all the income through to a lower tax rate, you're going to pay 1,500. You're going to be left with 12,000, 13,000 after tax. So to me, this property is looking too bad. If you can subdivide them, you could create value. If you could renovate these, you could probably get some more rent, and anyway, you can get some positive cash flow. So this is starting to look not too bad. Looking at some other stats, your return on investment, you can't calculate it. We've put no money in. Break even, 959. And if you do it on principal and interest over 30 years, you're looking at still losing about 7,800 a year. So what I would look at with this property is I would split up the $1 million loan and maybe have a third of it on principal and interest or half of it on principal and interest, and having a third, 2/3 or half on interest only, so that your cash flow is still okay and you're not taking all your cash flow away. So realistically, these numbers aren't too bad. And yeah, just gives you a few things to think about that, yeah, there's some options like this where you can create equity through separating them and get some reasonable cash flow from it. So hopefully you've found that interesting and it's given you a few interesting things. Obviously you have a lot of other due diligence and things you need to work through, which I'm not going through tonight, but yeah, hopefully it's given you some ideas. And if you're wanting to chat through properties that you might look at, wanting to know, yeah, is your strategy working? Yeah, I'll put in the comments, we have a 5 or 10 minute free chat that can be a great starting point. So hopefully you've enjoyed that, and thank you very much for listening to me. Thanks.